respected elders in the profession, and my dear brother and sister members. Many thanks to the Bangalore branch of SIRC for having extended this invitation and creating this time and space for all of us to share our views on treatment of notices which are disputed, which means there are notices which are not disputed. So we'll go into that. But before I get into that particular point, I want to start off the session with this timeless quote from Charles Dickens, Tale of Two Cities. All of you must have heard. It was the best of times, it was the worst of times, it was the age of light, it was the age of darkness, it was the epoch of wisdom, it was the epoch of foolishness, it was the season of hope, it was the season of despair, and finally it was the season of winter, it was the season of summer. This is how sort of Charles Dickens tries to bring out the extremities that were there during that particular period. The reason I felt this timeless sort of quote is relevant during, for this particular session is because it's the best of the times. Wonder for whom? For the department considering the collections, or for I would prefix it by saying unfortunately for the practitioners, that is you and me, that notices are being issued left, right and center. It was the age of wisdom, it was the age of foolishness. We would like to think that it is a foolishness on the part of the department. It may not be. There could be chances that there were inadvertent mistakes of the assessee. Don't feel bad. Partially due to us not probably telling us the assessees, due to which notices may have come. So, keeping this in mind, let's proceed further. Let's see what we can, complete in the next, say, in the next, say, 1 hour, 15 minutes. To share a secret with all of you, I am as interested as all of you to listen to Jatin sir. So, I'll try and hard stop at 3:30. And I would also want to listen to what Jatin sir has to say. So keeping that in mind, let's see the scope of discussion. And when that session was given, they gave me this agenda sort of a thing and said, these 8 things are within your scope and you need to make the session on these 8 points. So we'll restrict our discussion within in the population of notices within this particular species, and try and see whether the individuals in this species can be dealt with and how they can be dealt with. What about notices not disputed? Treatment of notices and disputed. So what about it, meaning that notices is not disputed? What about those cases? What are the cases where we may not dispute a notice, where the amount may not be material? You may be shocked to hear 1.5 lakh rupees, 2 lakh rupees, 3 lakh rupees are materiality for MNCs when they come to us, whereas it is 15,000, 20,000, 30,000 on individuals and firms. So materiality level differs. What is material is for the business to decide. Demands are in accordance with law. Sentiments apart, kindly keep sentiments apart. There are so many cases which I would, hopefully draw your attention to, where the demand is in accordance with law. How much ever so you may feel that the law is unjust, that the law is prejudiced, that the law is biased towards the revenue. Keeping those things apart, that is the law. If we have any grievance towards it, the only thing that we are required to do is get the law changed. If we don't get the law changed, then let us lump it and move forward with it. That's the second point. Third, pay demand and pass on the credit. There are cases where I can pay and it is not a case of fraud, suppression or misstatement where the notice is under 74, or it is not a case of before there was a demand under 129 and 130 which were specifically blocked as credit. So if it is not a case under 74, then we may as well pay it. Interest becomes a cost to us. If we pay the tax before the issue of notice or within 30 days of issue of notice, even penalty is not there. So assuming it is not for 5-year period from 17-18 where the interest at the rate of 18% comes up to equivalent to demand, we can pay the taxes, charge it to the customers if it's a B2B running customer so that he takes the credit and he passes on. As a passing reference, the time limit to issue show cause notice under 73 for the financial year 17-18 has lapsed, which means we can't take that option for the year 17-18. RCM demand. If the credit is with respect to the assessee itself, then pay the RCM, take credit. But the question again is, it's an RCM demand for which year? Is it an RCM demand for 17-18 or is it an RCM demand for 23-24? And if it's an RCM demand for 17-18, can that credit be taken today? That will be one of the questions we'll be discussing. Next, pay demand and buy peace, not intending to litigate. More often than not, I have looked at, I've seen very many assessees come. And when they bring out the case, I say, you have an excellent case, you have very good case on merits, why don't you fight it out? Their only worry is, sir, ಆಮೇಲೆ ಆಡಿಟ್ ಮಾಡೋವಾಗ ನೋಡಿ ಬೇರೆ ಪಾಯಿಂಟ್ಸ್ ಎಲ್ಲ ಆಚೆ ಬಂದ್ಬಿಟ್ರೆ ಕಷ್ಟ ಆಗ್ಬಿಡುತ್ತೆ ಸರ್. It stems out from the fact that may not apply to companies as such, MNC companies as such, but applies to our run-of-the-mill individuals, partnership firm, their atmosphere in which they work, the working capital of their company is such, or their economic ecosystem is such that they may have made certain sales, they may have made certain purchases, they may have taken certain credits which were not available, and so therefore they don't want the department to get into their books, so therefore they want to pay it and then they want to leave it aside. They don't want department scratching further. Litigation policy of the company. These are, in my experience, these are cases of MNCs with holding companies abroad. They want the balance sheets to be spick and span. In notes of accounts, litigation ಅಂತ ಏನು ಬರ್ಕೊಡ್ದು. ಸರ್ ನಾಳೆ ಇನ್ವೆಸ್ಟರ್ಸ್ ಪ್ರಾಬ್ಲಮ್ ಆಗಿಬಿಡುತ್ತೆ ಸರ್, ನಾಳೆ ಇದು ಸೇಲ್ ಮಾಡೋವಾಗ, ಸೊ ಹಾಗಾಗಿ ನಾಳೆ ಡ್ಯೂ ಡಿಲಿಜೆನ್ಸ್ ಆಗ್ತಾ ಇದೆ, ಪ್ರಾಬ್ಲಮ್ ಆಗೋಗುತ್ತೆ, ಸೊ ಹಾಗಾಗಿ ಕಟ್ಬಿಡೋಣ ಸರ್. ಸರ್ ಇಲ್ಲ ಸರ್, ಟ್ಯಾಕ್ಸ್ ಬರೋಲ್ಲ, ಇಂಟ್ರೆಸ್ಟ್ 15% ಇದೆ ಸರ್, ಪೆನಾಲ್ಟಿಗೆ 15% ಕಟ್ಟಬೇಕು ಸರ್, 74 ಅಲ್ಲಿ ಇಶ್ಯೂ ಮಾಡಿದ್ದಾರೆ ನೋಟಿಸು. These are the exceptional case of assessees who have fat amounts of money in their bank account and who are willing to pay the taxes where it is not necessary and then go on. As I said, treatment of notices, in my experience of late in GST, is being more and more of a business decision rather than a decision under the service tax law, where they would come and ask us and say, sir, idu dispute ಮಾಡಬೇಕಾ ಬೇಡವಾ, tax ಕಟ್ಟಬೇಕಾ ಬೇಡವಾ. No, it is now being derived more on commercial aspects and business aspect rather than on a legal aspect, is my experience, until and unless the demands are running into lakhs of rupees. Okay. Matters to be kept in mind while we are disputing notices which we are not going to deal with
few of the aspects that we're not going to deal with today because of the agenda, if you said what they have given it to me. We're not going to discuss on limitation aspects of notice, limitation aspects within which the order has to be passed. We are not discussing on that, but you should keep it in mind. 4.5 years for 74 case, 2 years, 9 months for 73 case. Valid service of show cause notice. Whether under 169 the notice has been served, and if it has been served, whether it has been served properly, whether it has been served at all. Next, cases where endorsements have been issued instead of issuing a show cause notice. Cases where only DRC1 has been issued without proper show cause notice. Cases where show cause notice has been issued but summary DRC01 has not been uploaded. Cases where DRC1 is issued saying that show cause notice is enclosed as an annexure and there are no annexures. And especially in this 2017 onwards, now when the notices are being issued, show cause notice is being very vague. Output tax appears to be payable. There is a mismatch in 2A and 3B. Unfortunately, most of the chartered accountants I have found have replied to that notice. It's just one sentence. 2A and 3B does not match. They will ask you only to do that Excel statement. What is your 3B and 2A? Your Excel statement only, they'll put it. And they will say they will demand notice. So that is another, in my understanding, a vague show cause notice. Simply because, please let me know which is the provision in GST law which says that 2A and 3B must match. There is a provision in 16 subsection 2 subclass C which requires the supplier to pay the taxes to the government. There is a provision 16.2 AA which got inserted with effect from I think 1st of January 2012, madam. From 1st of January 22 which requires the supplier to upload information. Up to 1st of January 22, there was no such condition. Okay. So therefore, there are these kinds of notices. Next. We now come into the first of the 8 cases that was given to me, asking me to deliberate on these points. Supplier is in default. Notices where supplier is in default. Before we understand supplier is in default, first we must understand what are supplier's duties. If we understand what supplier's duties are, then we'll understand what his defaults are. The first duty is that the supplier must upload his invoice and furnish his statement of outward supplies as a condition to take credit. Because if he has not uploaded, notice will be issued to him. When will notice be issued to me? For supplier's default. Notice will be issued to me for supplier's default in cases where supplier was supposed to upload the invoices and on the basis of that I was required to take credit. This was a condition that was inserted for the first time by subclause AA with effect from 1st of January 22, which means till that date there was no such condition. How we deal with it? 5 minutes later. Next, the second condition is that, or the second default of supplier which is going to affect me is the supplier has to pay the tax on the basis of which I take credit. This condition, however, is there from 1st of July 17 itself. That's the under 16 subsection 2 subclause C. Next, reversal or non-payment under section 41 subsection 2. This was again, section 41 itself was recast and the new section 41 was inserted. That was made effective from 1st of October 22. 41 subsection 2 of the newly inserted provision says, I will not be able to take credit if the supplier does not pay the tax. And it doesn't, why is that required? That is not required because 16 subsection 2 itself is saying supplier must pay the tax for me to take credit. If 16 subsection 2 itself said supplier has to pay tax for me to take credit, what was the requirement of 41 subsection 2? 41 subsection 2 said, where the supplier does not pay the tax, I am required to reverse the credit. Which means 41 subsection 2 is thinking of those cases where I have taken the credit which now requires to be reversed. Because it's talking of reversal. Reversal implies that credit has been originally taken. And finally, reversal on non-payment under 37 capital A. 37 capital A is a case again where the supplier has not paid, has not filed his GSTR 3B. Because supplier, if he has not filed his GSTR 3B, Rule 37A says, find out by the 30th September of the next financial year, after the end of financial year, 30th September, whether he has filed 3B. If he has not filed 3B, then you have to reverse your credit by 30th of November. That is this new Rule 37 capital A. I understand I'm going a bit fast, but at least make note of these provisions and go and see these provisions.
One question if I'm permitted.
Huh, ma'am?
Sir, can we say that 41(2) is retroactive or cosmetic?
41(2). In my understanding, it is prospective, ma'am. The reasons are like this. Wherever the provisions are retroactive, you will require something called as a validation act, wherein under the Finance Act schedule itself, it has to say that this particular provision which has been inserted is with effect from so and so date. The examples that immediately come to my mind is Rule 2A of the service tax valuation rules, which was amended, wherein they brought in the percentages for land 30/70. That was inserted somewhere in I think 2004 or something, but they gave it a retrospective effect. No, sorry, the valuation rules were there from 2006. Works contract provision was brought in from 1st of July 2010. This amendment was made somewhere in 13. And they said this is retrospective effect from 1st of July 2010. So unless you have the validating provision,
Because of the giving effect date is 1/10/22.
Hmm.
The reversal is required within 30th November by the recipient.
Hmm.
So what happens to April to September transactions was my question.
Got it. It simply means this provision is not there and this provision will not apply. Yes. Next, notices for supplier's default. The first of the many examples is where your 2A and 3B there's a mismatch. Explaining this a bit further, I said most of us have got notices which says that 2A and 3B does not match. Your 3B values are so much, your 2A values are so much, your 3B have taken excess ITC, and so therefore you're required to reverse the ITC along with interest. Most of them have got this. If it is from the State Department, the notice is under 73. If the notice is from the Central Department, the notice is under 74, asking you to pay 15% penalty also. Many of them, in these cases, when the notice came, have then woken up and said, okay, now get all the invoices. Now let us see what invoices we have taken credit on. Now let us see what 3B credit is there. Now let us see what 2A credit is there. Which means they are doing this exercise now. Whereas they must have done this exercise right at the time when they have filed GSTR9. I mean, how could you have filed GSTR9 without doing these things? Was the first point. Be that as it may, now we have done it. The second point is they are now going to say, look, these are all my experience has been when the chartered accountants bring this, they have the workings for 3B also, but for some reason the working is not matching. This seems to be a practical aspect which I found from more than one chartered accountants. It's not matching. So therefore now we do a reworking and now they get the invoices. And now say, these are all the invoices that I have. These invoices I have taken credit. These invoices, practically I'm telling you, these invoices are now not matching with 3B. So now we will give these invoices. We will look at the 2A what is there and we'll do a new reconciliation, and then we will say this is the amount of credit that is supposed to be taken, or this is the amount of credit that's liable to be paid. The first thing that you must keep in mind when you bring out invoices at this time, or when you are disputing whatever values they have given, is that you are introducing new evidence. If you are introducing new evidence, the burden of proof will then shift to whom? Burden of proof is always on the person who is bringing the evidence. As against that, when the show cause notice was issued, the burden of proof is on whom? Always note, the burden of proof is always on the person who makes the allegation. You are telling lies. If I say you are telling lies, I must say what lies you told. Not only must I demonstrate that you told lies, I must also bring someone. She told no, he told no. Or else it is my word against that person's word. Both persons' words are equal, which means not only should I make the allegation, I must also discharge the burden of proof when making the allegation. Or else it remains as an allegation, it doesn't become a fact. So therefore, whenever departments have issued these kinds of notices, what we have, in the absence of time, what we have tried and replied is, of course, this has to be with the concurrence of your client. I don't know how many of your clients will give you concurrence, but we have sort of replied in many cases saying that there is no provision in the GST law which requires 2A and 3B to match. Full stop. We reject the allegations made. Full stop. And the reply is gone. But the problem with these kinds of, see, how can you send these kinds of replies? First, that is the second thing. How can you take this kinds of reply to your client? That is the more important thing. Client is going to say, sir, what is this? And the best part is client will say, sir, return who filed? You only filed. 3B, you only filed. Books who audited? You only audited. I am only going to do postman's job, sir. This is the notice, you please take. I am not going to do postman's job. That is coming on portal itself. So, sir, I am not concerned, you please deal with it. The reason we have given these kinds of replies is, always keep it in mind, the more we are going to give in reply, the more things we have to substantiate. The pointed our replies are, the less we are required to substantiate. And in this case, we are simply on the allegation made in the show cause notice. For an allegation to stand, the first and foremost thing is, it must stand on the basis of statutes in the law, or the provisions in the law. If the show cause notice had been, there's a 2A and 3B difference, and if the show cause notice had stated, because your 3B is greater than 2A, it appears that your supplier has not paid the taxes to the government, and therefore there is a violation of 16 subsection 2 subclause C, then bring out your invoices, bring out your circular, bring out your certificates, everything. If it is not standing on the basis of provisions like this, if you introduce these invoices, then tomorrow you have to substantiate, because you have yourself brought the invoice. It is like entering a room. In the first case, we have not entered the room. In the second case, you have entered the room. Once you entered the room, you have to fight. If you don't enter the room, we are closing the notices on law itself, saying that there is no provision saying this. Even if it goes to tribunal, even if it goes to high court, nothing can be done of these notices, simply because there is no provision in law which says 2 and 3B must match. Got it? This is point number 1. Assume that your notices say that 16(2)C, it appears that there is a violation of 16(2)C. Therefore, the credit that you have taken in 3B is irregular because in 2A they have not uploaded. They have not uploaded is a sort of prima facie evidence that they have not paid. If they would have paid, they would have uploaded. So therefore, in these cases, what is required to be done? In these cases, what is required to be done is then now we need to discharge the burden of proof that the credit taken is proper. In these cases, we may have to rely on circulars 183 and 193. Circular simply are stating that in a case where your 3B is greater than your 2A, then if the credit taken is less than 5 lakh rupees, then get a certificate from that supplier that he has paid the taxes. The certificate must also state that he has actually made the supplies. They are wanting to take care of bogus credits. So two things: one, supplies have actually been made, maybe goods or services. Two, that you have actually, the supplier has actually paid the money to the government. These 2 points must be there in the certificate. In a case where the credit availed is greater than 5 lakh rupees from a supplier, then a CA certificate is required. My understanding is in this case the CA certificate of your supplier's CA will have to give you the CA certificate. Your CA, they may not open their books to your chartered accountant, so you may have to talk with your supplier, get a certificate from him. So these are the 2 points. Next, few decisions to help you. The first case is Divya Agencies. In Divya Agencies, what was argued before the High Court was that the 2A return or the 2A statement is merely a facilitation. There was a press release. I think the press release was 18th of October 18, and the 18th of October 18 press release stated that 2A is merely a facilitation. It is in no way a precondition to take credit. Uploading the invoice, if you remember, was brought in as a condition only from 1st of January 22. So prior to 1st of January 22, this press note is going to help you. Please note, in other words, the effect of this press note is only till 1st of January 22. After 22, it is not going to help us. This is the first point. The second point is also this press release dated 4th of May 2018. Please look at this press note. This press note is much better. It says no automatic reversal of credit. It says there shall not be automatic reversal of ITC on non-payment by seller. In case of default of tax by seller, recovery shall be made by seller from seller. However, reversal of credit from buyer shall also be an option available to revenue authorities to address exceptional situations like missing dealer, closure of business by supplier not having adequate assets. Means what they're saying? What they're saying in these cases is, if the supplier has not paid taxes, then this press release seems to be stating, please go and catch hold of the supplier, where the assessee has paid the taxes and the invoice money to the supplier, and the supplier has not in turn paid it to the government. Please go and catch hold of the supplier. Please don't demand the ITC from the recipient. You please demand the ITC from the recipient only in exceptional cases. That is, there is a collusion. That is, it is a bogus supply, or it is a case of missing dealer. Missing dealer is essentially meaning that, you know, that it's an example of bogus supplier, or where the business have closed and such cases. This point. Again, the same point was again reiterated in Suncraft Energy Private Limited, wherein again it was a case of demand. The demand was where the credit taken in 3B was greater than 2A, where the High Court said they had also, what they happened is they had also made the supplier a respondent in this case when they filed it to the High Court. Because the supplier was made a respondent, the High Court said, you first go and catch the supplier. Ask the supplier why he has not paid the taxes, and only after you catch hold of the supplier, then you come back to the recipient. Further, the High Court said, when remanding the case back to the assessee, saying, if the assessee has paid the full value of invoice to the supplier, if the assessee has paid the corresponding GST to the supplier, then please go and make your recoveries from the supplier. Don't come back to the recipient. Very good. Take care. Take this decision in your favor, but a slight, caveat emptor for all of you. Good decisions, but these are called as decisions in equity, which only the High Court can do. And it also depends sometimes on the, in my view, the advocates who are arguing and the judges who are there. Because there is a specific provision of 16 subsection to subclause C, which says that the supplier must have paid the taxes, then only credit is available. That condition for some reason has been ignored. Fair enough. So keep this subtle point in your mind when you rely on this decision. The next, we'll move on to the next point. A scene is alleging that you've taken credit beyond 2A. What do you mean by you've taken credit beyond 2A? Meaning, first of all, that 2A must be the basis to take credit. After you say 2A is the basis to take credit, then you have taken credit beyond 2A, which means there must be a provision which should say that 2A is a basis to take credit. That provision was inserted by Rule 36 sub Rule 4. That was inserted with effect from 9th of October 2019, which means up to October 19 there was no provision in law which required that credit had to be taken as per 2A. And the only condition that was required to be satisfied was that your supplier has paid the taxes. Uploading the invoices was not a condition. Now, what does 36 sub rule 4 stated? 36 sub rule 4 stated you can take credit. It said when it was inserted 9th of October 19, it said if your 2A is 100 rupees, then you can take credit equivalent to 120. That is, assuming your entire 100 rupees is eligible. They said take your 2A, assume your 2A is 200 rupees. Out of 200 rupees, find out how much is your eligible credit. Assume that the eligible credit is 100 into 20%. Up to 120 rupees you can take credit in 3B. That was what it started off with. 1st of January 20% got amended to 10%. 1st of January 21, 10% got amended to 5%. 1st of January 22, they inserted 16 to subclass AA, which said you have to upload. Only on the basis of uploading you can take credit. If he has not uploaded, you can't take credit. That is your 2B. 1st of January 22. This is what has happened. Please note the difference between 36 sub rule 4 and 16 to subsection C. 16 to C required the supplier to pay the taxes. 36(4) required the recipient to take credit on the basis of 2A, that is filing by the supplier. So 36(4) is a new condition which has been added. Before we get into the wires of 36, how do you take care of these notices? I'm not sure whether 19 notices have come. At least I have not dealt with 19 notices. You may have dealt with it. But there are a few pointers which I felt that I would want to share it with you as to how you can dispute these notices. Example is, what they're saying is, if your 3B is 5 lakh and your 2A is 3 lakh rupees, your eligible credit in 2A is 3 lakh rupees, 3 lakh into 1.2%. That is, I'm saying the dispute is from October 19 to December 19. 3 lakh into 20%, 60,000. So you can take credit up to 3 lakh 60,000. How much credit have we taken? 5 lakh, which means the demand will be for 1.4 lakhs. Understood how the demand is going to be drawn up? Now, to dispute these demands? The first reason for disputing the demand, actually all of you only must tell me. Considering the fact of what I have told up till now. Correct, but 9th of October 19, this provision was inserted. No, I told 36.4, they brought in a provision saying that on the basis of 2A you have to take credit. So, yeah, that is one point. On the basis of whatever I have already told all of you. Requirement is there from 9th of October 19. Okay, due to shortage of time, what's 245? Shortage, we will stop as is on 3:30, okay? I don't think I'll be able to complete, so we'll stop as is in 3:30. The answer that I expected of all of you is, condition saying that return must be uploaded was brought in only in the act, was brought in only from 1st of January 22. If this condition to avail credit was brought in only from 1st of January 22, it means prior to that date, there was no condition. Yes or no? The reason they have brought in is that it is a new condition. Always there was no reason to bring in that condition. If they have brought in a new condition, it means that there was no such condition before. That is the first answer. The second answer is that this is a condition which has been brought in under the rules. If it's a condition which has been brought in under the rules, it must be prescribed somewhere. That is, the act must prescribe, the prescription is given under 36.4. There was no provision in the act which prescribed such a condition. A provision called a section 43 capital A was brought in which stated such a condition. Please pay attention. A provision called as 43 capital A was brought in which prescribed this condition under the GST Act. But the best part of it is that provision was never brought into effect. It was simply brought in by Finance Act. It was never inserted. It was brought in by Finance Act or by 2018 Amendment Act, I think so. 43 capital A. Okay. The important point is it was brought in, but it was never given effect to. And most importantly, without giving the effect, this particular 43 capital A was deleted. Brought into the act, not given effect. Without giving effect, this provision itself is deleted. Which means as of today, if you go and see, there is no 43 capital A in the act. Which means this is again another condition, again in your favor saying, we are saying there must be a prescription. That prescription was actually brought in by a section. That section was never brought into force. If the section was never brought into force, can you bring it by way of an executive action under the rules? Because you must distinguish that the act is passed by the legislature, the rules is brought in by the government of India, which is an executive. Executive cannot legislate. Executive can only act according to the mandate of the legislature. Legislature brought it but not pressed, which means executive has overridden the legislature. That is your second point. And the most important point, like how ma'am told, the rules can never override the act. A very nice phrase brought in a judgment which said, only the dog can wag the tail can't wag the dog. Actually, I remember this, so I remember this concept. So this is this point. So in cases where you have taken credit beyond the limits specified at 36 sub rule 4, these are all the provisions which you can rely upon. It is a settled position in law that rules cannot bring in conditions which are not there under the act. It's a settled position in law that if it brings on such condition, such rules are ultra vires the act. One of the example is National Shipping Corporation of India Act, wherein the rules said import of service is liable for GST under the service tax law. The Supreme Court in National Shipping Corporation case said 66 capital A was inserted saying import of service is liable. So they said only from the date of insertion of the act import of service is liable. This rule which was inserted before the act, please pay attention, this rule which was inserted before the act, it was rule 21D subclause 4. Lot of cases on that, that's how I remember. This rule which was inserted before the act, Supreme Court said, has no value because a rule cannot demand tax. Similarly, a rule cannot take away a benefit. So therefore, kindly look at these points. Next, show cause notice alleging that credit taken beyond GSTR9. What is GSTR9? From 1st of January 22, that provision, I said condition got inserted. He has to upload invoice. That invoice on the basis of uploading itself will take credit. This condition is inserted. That return is your 2B. So now what has happened? I have now taken credit beyond 2B. What about those cases? If you have taken credit beyond 2B, before a notice comes, please find out, reverse it along with interest. Only thing is, while reversing along with interest, there is a circular which says you can, in case of CGST, you can aggregate CGST and IGST. In case of SGST, you can aggregate the credit of SGST and IGST, and if that aggregate of credit is greater than the credit that you have taken, then no need to pay interest. So keep note of the circular, it may actually help you. Now, there's this new rule that has been brought in, Rule 88 capital D, that has been brought in from 4th of August 23. What does this rule state? This rule states where your 3B is greater than 2B. Now these are all, what shall I say, system driven notices, which means you will get these notices periodically. For every tax period you are going to get it. Where your 3B is greater than 2B, automatically there is going to be a system generated notice. Rule 88D further says, or this for GSTR9, if you see at the end of it, it says there is a system generated notice, does not require signature. So therefore, wherever it is exists, automatically you are going to get a notice. Now, what is it that you are required to do? Importantly, you are required to reply to the notice within 7 days. The problem that is going to happen is, this 20th, if you look at the portal, we are going to look at the portal only next 20th. Notice has come and 7 days has also left. The effect of not replying within 7 days is, you will get a notice under 73 and 74. In my view, still okay. Reason I say still okay is because this is the 01C. You have got something called as GSTR01B. I'm digressing, but kindly oblige. 01B is a case where your GSTR1 is greater than your GSTR3B. Outward supply, 1 is greater than your 3B. In that case, you have 75 subsection 12, which says that where your 1 is greater than your 3B, direct recovery under 79. So you have this, your 88 capital C, I think it is, Rule 88C, which says that in that particular case, if your 1 is greater than your 3B, you are going to get a notice. Please keep this in your mind. Reason I tell this is, return filing is always done by our assistants. It's always done by article clerks. It may have a direct effect on the bank account of your clients. So you need to pay attention. So therefore, where your 1 is greater than your 3B, you are going to get a system generated notice saying that your 1 is greater than 3B. Again 7 days to reply there. If within 7 days you have not replied, then direct recovery. Of course, you have GSTR1D, which will be a recovery notice, but that is again within 7 days they will make the recovery process. So 7 days for 1B reply, another 7 days for 1D recovery notice reply, 14 days, 15th day anyhow for registration, bank account linking is mandatory. Bank account details they have. We will get to know only when manager sends the garnish order. So this much amount has been adjusted. So therefore, I said this is better in case of ITC because you will get a notice under 73-74. There is no recovery happening. In case where your 1 is greater than 3B, it's a direct recovery. So please always make sure that your 1 and 3B matches and that your 1 is never greater than your 3B. Okay. Okay. The best part is where your 3B is greater than your 2B. The best part is the notice itself says there could be 8 reasons for which my 3B is greater than 2B. So therefore tell what the 8 reasons are. So not only is he giving notice, he is also giving you answers also. Very good. Not of this, huh?
MCQ.
Okay, M3Q, yes. Oh, okay. Oh, instead of 4 we are getting 8. Okay. But the best part of that MCQ that I liked was the last MCQ, 8th one, others. You can put whatever you want there, not whatever you want, but you can bring in what your problems are. So the general reasons where your 3B could, genuine reasons where your 3B could be greater than your 2A are, ITC was not availed in the previous tax period. It was there in 2B of the previous tax period. I should have availed in that tax period. I am not availed. I have availed that ITC now. So current year 2B, current tax period 2B will be lesser than your 3B availed. Next, imports and SEZs. In case of imports, I pay it under RCM. In case of SEZ, goods and services, I pay under RCM. In both those cases, the credit is not going to be reflected in 2B. So therefore, I would have taken credit in 3B on the basis of the bill of entry that I would have filed. Again, that is a reason. Next, reclaim of excess reversal. I have made more reversal. Rule 42, Rule 43, my reversals are more. I have now come to monthly reversals I am making. In a particular month I have made more reversal. So therefore that excess reversal I am reclaiming now. If I am reclaiming, my credit will increase. My 2B is going to, my 3B is going to be greater than 2B. Rule 37 and Rule 37 capital A. What is Rule 37? Rule 37 is a case where I have not paid the supplier within 180 days. So therefore I reverse the credit. Once I make the payment to the supplier, I can take the credit. So it's a case of reclaim of credit. Rule 37 capital A. I'm going a bit fast. All of you seem to be, some of them are straight away sleeping. Full eyes closed itself. Nice AC. At least on my side, so full sleeping. Okay. Others physically present. Mentally they are in a transcendental state. They're doing good meditations, others. So, in that no thought state. I'm neither asleep nor awake, but I'm having this nice, okay, whatever. So therefore you have this 37 capital A, wherein your supplier has not paid the taxes, so you reverse the credit, whatever I told you before, and then once your supplier pays the taxes, you now get to take the credit back. That is 37 capital. At least note the provisions, you can always go back and look at it. Incorrect 3B. In my view, most times, I have wrongly made 3B last time. I am now making the corrections now. These are your various options that is available. Next, registered person in default. In my understanding, this is the heart of today's topic. Up till now, supplier's mistake I am made. My mistake, what to do in those cases? What could be my mistake? Conditions for supplier to or conditions where there is a registered person's default is for me to take credit, I must have paid the supplier within 180 days of the invoice of the not only the tax value, invoice value plus tax value. I must pay both. Then only the credit is going to be available to me. And Rule 37(4), what I just told now, 180 days I have not paid, reverse it. Once you make the payment to supplier, again take back the credit. That is not what I am concerned about. What I am concerned about is under Rule 37, there is this provision which says the time limit under 16 subsection 4 will not apply. What is the time limit under 16 subsection 4 before that? Time limit under 16 subsection 4 is saying for the period because we're doing 17, 18 to 22. For the period 17, 18, okay, the time period was March 19. For the period 18, 19 and subsequent, they said the time limit to take ITC was the due date for September month. So if you look at 18, 19, due date for September 18, what is September 18 due date? 20th October 18. That is the due date for me to take credit. So, what is this rule 37 saying in this case? If I have not paid my supplier within 180 days, you have taken the credit, reverse it. After you reverse it, say you make your supplier payment after 4 years, you can now take the credit. The time limit at 16 for what I just told now will not apply. Which means the provision itself, the act itself, the rule itself is giving conditions and scenarios where the time limit of 16 subsection 4 is not applying. Keep this at the back of your mind. This point is the most relevant fact. Now, what has happened in my case? What has happened in my case is I have not filed return. I want to file returns. Now when I want to file returns, they are belated returns, I want to take credit now. I want to file returns now and take credit now. What is the problem? The problem is 16 subsection 4, because it says assessee will not be able to take credit after the due date for September return. That is 18, 19. 19th September due date return is 20th October 19. Beyond 20th October 19, I can't take credit for the period 18, 19. Which means I can file return for 18, 19 belatedly, but I can't take credit on that. That is the point I wanted to say by belated filing. Other cases, I have filed returns properly, I have not taken credit of 18, 19. That invoice I came to know now. I want to take credit of 18, 19 now in November 2023 return. 18, 19 credit. I have filed returns then. I have missed out that credit. I want to take the credit now in 3B for the period November 23. Understood these two scenarios? Both these scenarios, 16 subsection 4 is going to be a hindrance. Next point. First I'll give you what all the defaults could be, and then let's see how we can dispute, if at all we can dispute. Next, RCM credit. What do you mean by RCM credit? This is a case where I had to pay the tax for the services that I have received in the year 1890. I had to pay the tax in 1819. I have not paid it. I want to pay the tax under reverse charge now, because I only have to pay the tax under RCM. It is not the supplier. So I will pay the tax now and I will take the credit now. RCM can be of two types. One, I am liable to pay tax under RCM, but the supplier is registered. Which means invoice is going to come from registered supplier. I will pay taxes, take the credit on the basis of my payment. Second, supplier is unregistered, which means I will not get a tax invoice for GST purposes. I am not going to get a tax invoice from the supplier. Under 31 subsection 3 subclause F, I have to raise a tax invoice. Which means 1819 I forgot, I will raise a tax invoice today. Dated what? Today 17th. 18 November 23, I will raise a tax invoice. I will make a payment on 18 November 23 and I will say, because the invoice is dated 18 November 23, I will take credit. But pay attention, the service is for the period 1819. I should have paid the taxes in 1819. I have not paid. I am paying the taxes now along with interest. Whether I can take that credit, because the invoice is within, what is the invoice date? 18 November. What is my tax period? November. So I must be eligible to take credit. And anyway, this is not going to come in 2B because this is not RCM. Sorry, because this is not forward charge. Supplier is not going to upload. Whether all these credits can be taken. All the high courts was flooded. You remember best of times. Unfortunately, best of times for the advocates. They are, in all the high courts, writ petitions have been filed. Even in Karnataka High Court, writ petitions have been filed. The batch is yet to reach. But in a few high courts, already we have got decisions. What are the few high courts where we have got decisions and which I am aware of? One is Govinda Constructions of Patna High Court. Second one is your Andhra Pradesh High Court. Any high court other than this also? Okay. Both these high courts have said credit is not available. Time limit has been given by the legislature. You have to take credit within the time limit. If you have not taken the credit within the time limit, credit is not available. If we are going to dispute it today, what could be our grounds of dispute and whether those disputes are going to hold water in a court of law. The reason you need to take that decision today is because if you feel those submissions are going to hold water, then there's not going to be an interest liability. In case the submissions are not going to hold water, your client's interest will keep on ticking. I remember Nani Palkiwala's quote. He says, the best example of eternity is the Indian legal system. Remember Sunny Deol, Tariq pe Tariq? Which means all I want to stress upon all of you is that it's going to take a very long time before the decision finally comes in your favor. And in case the decision is not in your favor, you will be saddled with the interest liability which you could have reduced had you arrived at a proper decision. Now, what are the arguments that you are going to take? The arguments that you are going to take is input tax credit is my constitutional right. Constitutional right, okay. Which provision in Constitution? There is an article called Article 300 capital A, wherein it says that no person shall be denied of his property except by authority of law. So 300 capital A, they are saying that input tax credit which I have paid it to the supplier, which the supplier has paid it to the government, which means I have already prepaid this to the government, which the act allows me as credit, so therefore that is my property. In fact, what I wanted to let you know is, this is a property right. This property right was originally formed part as a fundamental right. If I'm right, it is I think Article 31, I think so. It was a property right, was a fundamental right when the Constitution came. It was amended and was taken out from the fundamental rights and it was brought into 300 capital A. You had this zamindari abolition system as soon as the independence came. So you had to take the land from the zamindars and you had to give it to tillers. So all the zamindars said, property is my fundamental right. So government cannot take away my right to land. So they brought in, they removed it out from fundamental right. Sorry for digressing. Statutory right. Statutory right means this is coming out from a statute. So where is this coming out from? We are saying this is a benefit that we are getting under 16 subsection 1. It is a credit in relation to my business. I have paid the money to the supplier, therefore I am eligible for credit. Versus the other thought which says input tax credit is a concession. It is a benefit that is given by the statute, and because it is a benefit given by the statute, the benefit shall be subject to the conditions which the statute puts. And if you don't follow the conditions given in the statute, you are not eligible for the benefit. This was the first line of argument. The substantive arguments on law before the courts of law. Now more or less a settled position in law, wherein the courts have repeatedly held input tax credit is neither a statutory right nor a constitutional right. It is a benefit extended to you. If it is a benefit extended to you, please take the benefit subject to conditions. You don't want to follow the conditions, don't take the benefit. In short, this is the first line of argument. The second line of argument is 16 subsection 4 is a procedural, the time limit within which I have to take is a procedural provision. Within what time I have to file, what form I have to file, where I have to take the credit, these are procedures. So 16.4 is saying you have to take credit in 3B in so much time. So it's a procedural provision. Input tax credit by itself is a substantial provision. Further, if you look at 16 subsection 2, it said notwithstanding anything contained under this section, which means 16 subsection 2 is overriding 16 subsection 4. Because it says notwithstanding. Because it is notwithstanding, therefore 16.4 will not apply. Again, nowhere relevant, because 16 subsection 2 is a notwithstanding provision, is only giving you only conditions. It is not a provision which is giving you benefits. That is point number one. Point number two, as far as procedural versus substantial conditions is concerned, again they are saying 16 subsection 4 is not a procedural provision, it is a legislative policy. And if the legislature says this is the time limit, so be it. And we are all so very aggrieved by this legislative policy, forgetting the fact that such policy is not a new policy under the GST law. You had time limits within which to take credit under the VAT law. You had time limit under which to take the Senva credit under this Senva credit rules 2004. So what are all of us suddenly so very aggrieved about, which was not there before? What we are all aggrieved about, which was not there before, was that invoices were not required to be uploaded. So you could do the teaming and ladding every month. You only had to demonstrate the amount that was there in the return. You need not substantiate what are all the components of that amount. Now you need to substantiate the components. That is the problem. Further, I have given you two Supreme Court decisions, Jayam and Co., ALD Automotives. You have another Supreme Court decision relating to Karnataka High Court. I think ECO. Sorry, I'm not able to recall. With respect to Karnataka VAT time limit, it went to Supreme Court. The word is some eco something is there, wherein again the Supreme Court said the time limit under the Karnataka VAT Act to take credit is a proper provision. It is not violating the constitution, and so therefore you have to take take the credit within the time limit of the VAT Act. If you have not taken the credit, then your credit is lost. So therefore there are decisions in favor of time limit, there are no decisions against the time limit. Next, that is in Supreme Court I'm talking of. Next provision is ITC reversals. The next notice is 350. Okay, ITC reversals. What could be the example of the notices? Notice that I have come across is a case where they've taken the entire P&L account, where we have taken the credit, and they said all the items in your P&L account are common expenses, and so therefore you need to reverse. If you have a, okay, first of all, when do you need to reverse ITC? First question. Simple. When we have taxable and exempt supply, I need to reverse ITC attributable to the exempted supply, for the simple condition being when I am not paying the output tax, corresponding input tax credit must not be available. That's the reason for the ITC reversal. Okay. Now, what is the, in broad, what is the provision under Rule 42 for ITC reversal? They are saying first find out what are the expenses directly attributable to taxable supplies? Take the entire credit. What are the input tax credit directly attributable to exempt supplies? Fully remove it. From your total credit of 100 rupees, reduce what is fully attributable to taxable, reduce fully attributable to exempt supplies. The balance is going to be common. Yes or no? This common you attribute on a pro rata basis to taxable and exempt supply. Example of this common could be your audit fee, could be your security charges, could be your advertisement charges. Okay? Now, what has happened over here? What has happened over here is the department is not trying to see what is attributable to taxable, what is attributable to exempt. Entire credit, they are asking you to reverse it on a pro rata basis. Straightforward, violative of Rule 42. Next, they want to ask you to reverse credit attributable to value of land. Is ITC available for construction services? Is ITC available for construction services? Answer is no. From 1st of April 19, ITC is not available for construction services if it relates to residential properties. If it is a commercial construction property, the ITC is available. Understood this fact? Prior to April 19, credit was available. Understood? Now, prior to April 19, when, okay, first tell me, now that I am actually telling this point by point, do you have this cases or not? If you don't have this case, I will proceed further. Okay, tell you have builders amongst your clients? Okay, then I need to tell this. Whatever I am telling now is prior to April 19. Tax was payable at the rate of 12%. ITC also was available. What happened? Tax was payable on the flats sold where the consideration was received prior to OC. Once the OC came, whatever flats which remained unsold, 100 flats, I have already sold 80 flats prior to date of OC. On the date of OC, 20 flats are remaining unsold. Don't you think while taking the credit, I would have taken credit for 100 flats? Have I not paid output tax only for 80 flats? Which means, don't you think I must reverse the credit for 20 flats? That is the rule for reversal. Now, another point while reversal in those cases was, for 20 flats I will reverse. Now, in the 80 flats which I have sold prior to OC, have I paid output tax? 80 flats sold before OC, 20 flats sold after OC. Before OC, am I liable to pay GST? Yes. So for the 80 flats, have I paid GST? Can I take the ITC? Simple answer. I have paid output tax, I can take ITC. But the flat, if I have sold it at 1 crore, that 1 crore is attributable to undivided share of land plus construction. On the undivided share of land, is GST payable? No, because they give you that 1/3 abatement. If they give you that 1/3 abatement, on the 1/3 value you have not paid GST. If it is 3 crores is the value of your flat, 1/3 of 3 crore, 1 crore is value attributable to undivided share of land on which they are not asking you to pay GST. They are asking you to pay GST only on the 2 crore value. Which means on 1 crore value they have not asked you to pay GST. Which means for the 80% what flat also that you have sold, don't you think 1/3 value of the corresponding ITC must be reversed? That is this point where they have said sale of credit attributable to undivided share of land for flats which are sold before OC, the credit has to be reversed. The argument that is taken is the 1/3 value is abated value. It is given as an abatement, it is not given as a exemption. Because it is not given as an exemption, therefore credit need not be reversed. However, nothing of this, in my view, will hold water because of 17 subsection 3. Because 17 subsection 3, now explanation, before also said sale of land is to be treated as exempted supply. So therefore, this corresponding credit also has to be reversed. Okay. Cases of your builders where the construction has happened in, construction is completed in 1718. If the construction is completed in 1718, same example, 180 sold, 20 unsold. Don't you think the corresponding 20 ITC needs to be reversed? But in this case, the ITC was availed in prior to 2017. I have availed Senvar credit, I have availed VAT credit. The question is, can that be demanded? Because what can be demanded under 73, 74 is input tax credit. If you look at input tax credit, it says input tax credit is defined as credit of input tax. You have to go and read section 2. Input tax credit means credit of input tax. If you now go and see the definition of input tax, they will say input tax means CGST, SGST, IGST. This is not CGST, SGST, IGST. This is transition credit. If this is transition credit, this is not GST. If this is not GST, you can't demand tax. Could be an argument. However, in my view, credit, it needs to be reversed because kindly have a look at section 142 subsection 8, which says any demand of the erstwhile law will be treated, if it is not demanded as the Senvar credit, can now be demanded as GST. That is the first point. Second, the fact that you have to reverse the credit was already there under the erstwhile law. Whatever credit attributable to land, you had to reverse was there in the erstwhile law, which are only doing it now.
142A, demand has to be by output tax and not by ITC.
No, it says any proceedings. Please see. My understanding is proceedings. So I understood proceedings would include demand of ITC or output tax. Kindly let me know. Okay. Next option is blocked credits. Okay. This is what is happening. This I have taken this from a AAR. This is a supplier of cement. The cement has got distributors. The distributors will be given benefit according to the target. More the target, more the benefit. What has happened in this particular case is, what has happened in this particular case is, instead of giving credit to the dealers, what the supplier has done is he has given them white goods or he has given them gold coins. If you cross 10 lakh rupees, 20% discount. If you cross 20 lakh rupees, 30% discount. Whatever the discount amount. So more and more turnover you cross, more and more discount. So he has to give you discount. Instead of giving discount to you, what he has done, he has given you white consumer goods or he has given you gold coins. So now the question is this gold coins, is this white consumer goods that I have given to my supplier, is the credit on that blocked? First you must be thinking he is a cement manufacturer. He is now selling fridges. He is now giving TVs. He is now giving two-wheelers, four-wheelers. He is giving gold coins. That is not my business. Therefore no GST. Sorry. Even the definition of business includes an adventure also. So therefore, you may be a supplier of cement, but even if there is a single transaction of another supply, it is still liable for GST. That is the first point you must understand. Second understanding is this is given free of cost. It is not given free of cost. It was given under the obligations of a contract. Because the contract with your dealers are going to say, this turnover, this discount, next turnover, next discount, third turnover, third discount. Which means you are obligated to give him the discount under a contract. Which means what you have given as gold coins or white consumer goods is not without consideration, it is with the consideration. The consideration being that he must reach that turnover. Consideration is not in terms of money, consideration is by way of a act. That is second point. So, in this case, what is required to be done is, you need to pay the output tax. You need to pay GST on the white consumer goods that you are giving to your dealers, and you need to take the corresponding ITC. We may say, I have given gift to my dealers. Function agattalvapa. 30th, they will have a big countrywide function. Countrywide function ಕೊಟ್ಬಿಟ್ಟು ಅದು ಕೀ ಕೊಡಲ್ವಾ? ಗಾಡಿ ಕೀ ಕೊಟ್ಟು ಫೋಟೋ ತಗೊಂಡು ಏನಂತ ಹೇಳ್ತೀವಿ? ಗಿಫ್ಟ್ ಅಂತ ಹೇಳ್ತೀವಿ. ಅದನ್ನ ಗಿಫ್ಟ್ ಅಲ್ಲ. 17.5 subsection H ಅಲ್ಲಿ ಒಂದು ಪ್ರಾವಿಷನ್ ಇದೆ, where the goods are disposed of by way of a gift. So we may say it is gift, actually gift ಅಲ್ಲ ಅದು. You are giving this under the obligation of the contract. So output tax ಕಟ್ಟಬೇಕು, corresponding ITC ನು credit ಸಿಗುತ್ತೆ. Please note, if your customers have reversed the credit, this is important. If your customers have reversed the credit, saying ಕಾರ್ ಕಿ ಕೊಟ್ಟೆ, ಗಿಫ್ಟ್ ಕೊಟ್ಟೆ ಅಂತ ಕಸ್ಟಮರ್ಸ್ ಕ್ರೆಡಿಟ್ ಏನಾದ್ರು ರಿವರ್ಸ್ ಮಾಡಿಬಿಟ್ರೆ, tomorrow you will get a notice saying please pay output tax, because it is not gift. You have business obligations to give him. It is not charity that you did there. Because he made certain turnover, therefore only you gave. For all the other people sitting there who didn't get that, why they didn't get it? They didn't do that much amount of turnover. You didn't get that much amount of business from them. So therefore it is not gift. You need to pay the output tax. Tomorrow notice will say pay output tax, corresponding credit you have not taken. Reverse ಮಾಡಿಬಿಟ್ರಲ್ಲ. Because there is a provision which says where it is goods are disposed of by way of gift, credit is not available. What happens? You will pay output tax also, corresponding ITC also you will not get. So please be careful, especially all your customers. Sir Bandra, Janin sir Bandra. Okay, 5 minutes. Okay. So therefore, especially all your clients who are car dealers, warranty payments agatte, warranty replacements agatte, all this will fall over here. So please be careful. I'll deal with this one point and then we'll close. Construction ಮಾಡುವಾಗ HVAC AC ಇದು ಹಾಕ್ತಾರೆ. ಸೆಕೆಂಡ್ ಎಸ್ಕಲೇಟರ್ಸ್ ಹಾಕ್ತಾರೆ, ಎಲೆಕ್ಟ್ರಿಕಲ್ ಫಿಟ್ಟಿಂಗ್ಸ್ ಹಾಕಿರ್ತಾರೆ, ಪಾರ್ಟಿಷನ್ಸ್ ಮಾಡಿದ್ದಾರೆ, ಆ ಥರ ಲಿಫ್ಟ್ಸ್ ಹಾಕಿದ್ದಾರೆ. ದ ಕ್ವೆಶ್ಚನ್ ಇಸ್, ಡಿಪಾರ್ಟ್ಮೆಂಟ್ ವಿಲ್ ಸೇ ದಿಸ್ ಇಸ್ ಅ ಬ್ಲಾಕ್ಡ್ ಕ್ರೆಡಿಟ್. Please note, I am talking only for the period prior to April 19 for residential, for all the builders, and I am talking post April 19 only for residential purposes. Because April 19 ಆದ್ಮೇಲೆ 1% ಅಥವಾ 5% ಅಷ್ಟೇ ಟ್ಯಾಕ್ಸ್ ಇರೋದು ರೆಸಿಡೆನ್ಷಿಯಲ್ಗೆ. ಕಮರ್ಷಿಯಲ್ಗೆ 18% ವಿತ್ ITC ಇದೆ. ಸೊ therefore ಕಮರ್ಷಿಯಲ್ಗೆ 18% ವಿತ್ ITC ಇರೋದಕ್ಕೆ ಏನಂತ ಹೇಳ್ತಾರೆ? ದಿಸ್ ಇಸ್ ಬ್ಲಾಕ್ಡ್ ಕ್ರೆಡಿಟ್. ಏನ್ ಬ್ಲಾಕ್ ಕ್ರೆಡಿಟ್? ದೇರ್ ಇಸ್ ಸಮಥಿಂಗ್ ಕಾಲ್ಡ್ as 17 subsection 5 subclass D. Input or input services used for construction for own business purposes. What am I? I am a builder. What am I built? I have built a mall. What have I done? In the mall I have used all this. Input or input services used for construction for in furtherance of my own business. These are all inputs used for construction for furtherance of my own business. So ನಂದೇ ಮಾಲ್ ಇದೆ, ಅಥವಾ ನಂದೇ ವೇರ್ ಹೌಸ್ ಇದೆ, ಅಥವಾ ನಂದೇ ಫ್ಲಾಟ್ಸ್ ಕಟ್ಟಿದ್ದೀನಿ. ಸೊ ಕ್ರೆಡಿಟ್ ಇಸ್ ನಾಟ್ ಅವೈಲಬಲ್ ಅಂತ ಕೊಡ್ತಾರೆ. Is credit not available? These notices have already come also. Is credit not available? In my view, credit is available. The reason in my view credit is available is there is also, it says, except plant and machinery. Which means credit is not available except plant and machinery. Artha eno plant and machinery ge credit available. What do you mean by plant and machinery? Plant and machinery means apparatus, equipment, machinery fixed to earth by foundation or structural support that are used for making outward supply. ನಾನು ಏನಂತ ಹೇಳಿದೆ, ನಾನು ಮಾಲ್ ಮಾಡಿದೆ. ಮಾಲ್ ಏನಕ್ಕೆ ಯೂಸ್ ಮಾಡ್ತೀವಿ? ಫಾರ್ ಔಟ್ವರ್ಡ್ ಸಪ್ಲೈ ಆಫ್ ರೆಂಟಿಂಗ್ ಆರ್ ರೆಸಿಡೆನ್ಷಿಯಲ್ ಕನ್ಸ್ಟ್ರಕ್ಷನ್, ಕಮರ್ಷಿಯಲ್ ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಕಟ್ಟಿದೆ. ವಾಟ್ ಇಸ್ ದಟ್? ಫಾರ್ ಔಟ್ವರ್ಡ್ ಸಪ್ಲೈ ಆಫ್ ಸೇಲ್ ಆಫ್ commercial buildings, for outward supplies, which are used to make outward supplies, but excludes. What is excluded? Land and building or other civil structures. Telecommunication towers are excluded. Pipelines are excluded. Now whatever I have taken, is it telecommunication tower? Is it pipeline? No. It is. If it is not telecommunication tower, it is not pipeline. Now whatever I said, ಎಕ್ಸ್ಕವೇಟರ್ ಇರ್ಬೋದು ಅಥವಾ HVAC ಇರ್ಬೋದು, ಇಸ್ ಇಟ್ ಲ್ಯಾಂಡ್, ಇಸ್ ಇಟ್ ಬಿಲ್ಡಿಂಗ್? HVAC ಮೇಲೆ ಇದು ಒಳಗಡೆ ಹಾಕಿದೀವಲ್ಲ, ಬಿಲ್ಡಿಂಗ್ ಅದು? ಆರ್ ಇಸ್ ಇಟ್ ಅನ್ ಅಪಾರ್ಟ್ಮೆಂಟ್ ಟು ದ ಬಿಲ್ಡಿಂಗ್? ಬಿಲ್ಡಿಂಗ್ ಎಲ್ಲ ಪೂರ್ತಿ ಕನ್ಸ್ಟ್ರಕ್ಟ್ ಆದ್ಮೇಲೆ ಅದನ್ನ ಫಿಕ್ಸ್ ಮಾಡ್ತೀವ? ಸಿಂಪಲ್ ಕ್ವೆಶ್ಚನ್ ಅಪ್ಪ. ಇದು AC ಸಿಸ್ಟಮ್, ಸೆಂಟ್ರಲೈಸ್ಡ್ AC ಸಿಸ್ಟಮ್ ಬಿಲ್ಡಿಂಗ್ ಅಲ್ವಾ? ನಿಮ್ ಪ್ರಕಾರ ಏನ್ ಅನ್ಸುತ್ತೆ? ಬಿಲ್ಡಿಂಗಾ? Is it construction of building, or do you install it after the construction is at least at the finishing stage? So therefore you don't call it as construction. So therefore at least builders ಗೆಲ್ಲಂತೂ ಈ ತರ ಜಾಸ್ತಿ ನೋಟಿಸಸ್ ಬಂದಿದೆ. So we are saying this is not forming part of blocked credit, because one, it is not, this taking credit on this is not construction, and second, this falls with the meaning of plant and machinery. Just to end, even in cases where it was blocked, Safari Retreats, Orissa High Court said credit is available because it will lead to cascading effect of tax. It is now there before Supreme Court. My view, 100% the decision is going to be in favor of revenue, not in favor of assessing. Thank you.
The intricacies and nuances of GST notices which are disputed are very well built upon by the learned advocate CA A Saiprasad sir. With his experience from handling the issues in various forums up to High Court of Karnataka has come in handy now. It was Saiprasad sir versus the sumptuous lunch had by members for 1.5 hours, but it is the experience and subtle way of letting us know that it's okay if we have received notices due to some mistakes from us. And full 1.5 hours discussion, Saiprasad sir has won it. A big round of applause for CA Saiprasad sir for that fantastic session. We, on behalf of members present here and all the managing committee members of Bangalore branch of SFICI, would like to hand over a memento to the speaker, and I welcome CA VM Tuppad, CASA chairman, to come out today and then do the honors. Thank you, sir. Members, let us now break for tea and reassemble sharply at 3:45 p.m. For CA Jatin sir's session. Thank you.